Thanks very much for joining, everyone. I'm really excited to be moderating this panel this morning on stablecoins and how they can unlock new opportunities for brokerage and CFD platforms. We're joined by a fabulous group of folks, some of which are offering a stablecoin funding mechanism, some of which are in crypto already, and so I think it would be a really insightful discussion. I think, the ability to attract customers is one of the key things for CFD and brokerage platforms. The ability to attract customers across the world and allowing them to fund in an instant and very cheap manner, we think is one of the huge unlocks for this market. Just maybe bringing it back to a personal level, just some personal anecdotes as to why this makes sense, maybe. We've obviously seen the meme stock mania. If you want to fund your account, it can take up to 5 days, right? So you see an opportunity, you get caught up in the meme stock mania. How do you actually fund your account on a Sunday evening? That's one story. Also, if you talk to folks, and I was just having a conversation just now around some of the risks of fraud for platforms. The beauty of stablecoins is that it's an irreversible transaction. There is no concept of chargebacks. And then when you think about the costs of funding across the globe, many CFD platforms, and some of the folks today will talk about the breadth of customers and geographies that they service. The cost of funding, the time to fund, inhibits the ability to service a market really, really effectively. So we think that stablecoins is going to be a huge part, an alternative payment method for brokerage and CFD platforms. So today I'll let folks introduce themselves. They'll do a better job of it. But today we're joined by Nithya, who leads Digital Assets Product Director at TP ICAP, Ritu, who's VP Regional Director of StoneX, Laurence, Head of BD Digital Assets of IG Group, and Tariq, Ahmed, Head of Payments and Customer Success at Trade Nation. So folks, maybe we'll go this way to keep it easy. Why don't you just introduce yourselves briefly, 30 seconds, and let folks know who they're seeing today.
I'm Nithya, and I am the Product Director at the Digital Assets team at TP ICAP. My background is largely financial markets and banking, and now I work on digital assets.
Thanks very much for having me. I'm Laurence Willows. I head up business development for digital assets based in the UK. In terms of the offering that we have today, so we have a CFD offering in the UK through IG's platform and our various other locations. But in the US, through our US brokerage firm, we have a spot crypto offering, which is powered by Zero Hash. We also offer listed futures on Bitcoin and Ethereum, have the Bitcoin and Ether ETFs listed and available, and also have a self-custody wallet called Tasty Crypto, which is currently supporting 4 of the major blockchains.
Hi, I'm Tariq. I'm Head of Payments and Customer Success for Trade Nation. We're a spread trading and CFD brokerage firm with multiple licenses across the globe. I think so my sort of context for this event is I introduced stablecoin and crypto funding mechanisms for traders to fund and withdraw from their trading accounts. I didn't do that from the background of being an expert in crypto at all. I think we had a few wobbles, made a few mistakes, but we've now landed in a really good place where it's part of our mission, which is to make deposits and withdrawals from trading accounts as smooth and simple as possible, and the stablecoin funding is part of that mission.
Excellent.
Hi, I'm Ritu. I work in StoneX as the business head for our international markets, and I have to say in the self-directed segment, because StoneX is vast and we have institutionals and commercial clients, banking clients and payments clients as well. And what we offer in the crypto space is crypto CFDs for traders or retail traders. We are actively looking at offering cryptocurrencies, as well as from an institutional perspective, we are one of the largest clearers for cryptos on the futures exchanges. So that is something sort of StoneX is very, very actively sort of invested in digital assets. And stablecoins is an area of an interest. So yeah, I'm curious to see where we land on this panel.
Excellent. So Laurence, maybe starting with you. What are some of the frictions of payment rails as they exist today?
Yeah, so looking from a domestic level first, I think with faster payments, I mean, clients are able to deposit into their account in a matter of minutes, right? So we don't see as many of the frictions when looking domestically. But when you look internationally, particularly in sort of our US business where you're serving customers in sort of LATAM and other emerging markets, the time to be able to fund account can take anything from a day through to 3-4 days, right? Which when you're in an industry that is very fast moving, where you want to be able to fund your account to trade other products and assets based on market movements, it needs to be much faster. So that's probably the main piece, but also the actual charges, given the number of intermediaries that are involved in those cross-border transactions, clients can be paying anything between sort of 60 basis points through to north of 150 basis points, which when you're doing that in both directions to get into the account and out of the account is really not an overly viable proposition. But you come back to sort of the domestic level, and there is a huge reliance on the providers that are giving the service to process payments. And if there is an outage, which will impact the entirety of financial markets because everyone's using a few payment providers, suddenly the clients aren't, I guess, in the best place to be able to fund their account.
Excellent. And then maybe Tariq, maybe you can share, since you've solved the problem, how do you, are there any data points that you can share what was really the key genesis for the go, no-go for offering this funding mechanism?
Yeah, I think you've touched already in your introduction, and you've just mentioned some of the friction points that we have with existing payment rails. Cost, risk, and time, I think, are the three sort of main categories of those. And I think I came to the CFD space from sports betting and gaming, and it's very, very different. One of the key differences is the average sort of transaction value, and for high value payments. So for international customers, they may be used to using e-wallets or other alternative payment methods, which are fine for certain levels of transactions. But I think in this space, we need to be able to handle the larger transactions. And that's where we've seen some of the success really coming through of almost attracting a different kind of customer, maybe high net worth individuals internationally, that previously wouldn't have had access to our services because they have no mechanism for funding their account without a great deal of friction, a cost, and a time as well. So that's been a critical thing to handle the larger transactions.
Excellent. And then maybe Ritu, you can maybe expand on that a little bit more about the international aspect. Are there any corridors that you see as key unlocks or particularly challenging today that potentially stablecoins can unlock?
I think we touched on sort of a couple of them earlier. So the challenging I would say deposits and withdrawals continue to be challenging for our industry per se. And they are challenging because the industry is classified as a high-risk industry, right? So there are definitely that many more checks, that much more sort of compliance to regulatory kind of requirements that needs to be made. And in that context, established payment rails like card networks sort of are a winner because everybody's familiar with them. It's not necessarily that they are the best, but it's just the familiarity factor. However, just to give an example, like card success rates or card payment success rates in our industry, let's say for a UK customer, the success rate would be as high as 70%. This is like the number of times you've attempted versus successful to make a deposit. For a LATAM customer, that goes down to 13% or 15% even. So the amount of sort of business that is lost because we don't have the right payment rails, and also the amount of participation that is lost from an opportunity perspective, from the customer's perspective, is tremendous because we don't have the right payments rails being utilized at the moment. LATAM is just one example. Other markets, in terms of potential, as well as sort of client demand side of things, are really the Middle East and Southeast Asia as well. and parts of Africa too. All sort of international markets, all sort of very, very challenging when it comes to the payments landscape for this side of the market.
Excellent. So I think we've focused quite a bit on kind of retail, maybe turn the conversation a bit more to the international, institutional side, Nithya. You know, what are the challenges there? I mean, obviously, in late May, we moved to a T+1 settlement. You know, there's plans to move to T0. Can you maybe talk a little more through the lens of institutions as opposed to kind of retail?
Sure. Just to give you some context about where I'm coming from, the crypto ecosystem. We had a spot crypto exchange that's for institutional players, and it's all exchange custody, so the custody is separate to the exchange. Now, when you think about the context of this, crypto is 24/7. It brings with itself a lot of promise of sort of instant settling. But if you're trading this, you probably want the benefits of net yield. And so you're already looking at intraday settlements or end of day settlements. And funding here can be challenging, like many people have mentioned, or already in terms of deposits and withdrawal. You're still trying to bridge the gap between fiat rails and blockchain, etc. Taking a step back and looking at it more from a capital markets lens, does T+1 or T+0 moving towards these rails impact this? It's definitely more powerful to have a stablecoin that enables tokenization and brings to light the promise of post-trade efficiency. So there is that can come into permission.
Excellent. And then, so covering kind of just the retail and the institutional side, maybe just some, I think, some interesting stats around stablecoins. Actually, today is actually the highest amount of stablecoins that exist ever in circulation. But I think where we focus a lot is just how large the market cap, so to speak, of stablecoins are. I think what's more interesting is actually on-chain volume, because that actually shows you utility. And so actually last year, there was $11 trillion actually used on-chain, which is actually approaching on par with the amount of volume that was done on the Visa network. There's 600 million crypto wallets globally, and it's obviously a 24/7, 365 funding mechanism. So I think those are kind of really salient facts as we kind of sit here today. Maybe Tariq, you shared kind of the problems that you're trying to solve. Obviously, without sharing anything too confidential, can you share any kind of learnings or kind of has it been a success, or what are the metrics that you look for success?
Yeah, I think there have been some learnings, that we went through. I think choosing the right partner is very important. I think one thing around crypto from a retail perspective is around the user journey. It's a little bit clunky. Obviously, if you use a credit card or if you use Apple Pay or something like that, very, very simple. You don't really have to key in much information. Crypto, you need to have some awareness of what you're doing, and the wallet addresses are quite long. The amounts involved have a lot of decimal points, so it's a little bit more clunky. And I think it's very important to get the smoothest experience possible to keep the risks associated with that to a minimum. We, without disclosing sort of any details, but we did start with one provider who just the user experience caused a lot of friction. So you've got if you have an invoice for an amount, but then your crypto wallet provider will deduct a small fee from that amount. Then the invoice is not fulfilled, the transaction failed. We then had to manually step in. What do? Do we spot convert this crypto amount to fiat? Do we return the payments or send the crypto back? And just cause a lot of manual work and friction. So I think it's important to get a solid provider who has a smooth sort of user experience. I think that's one of the challenges with the crypto space, is getting that slick as possible.
Yeah, that's interesting. I mean, I think with stablecoins and crypto generally, right? There's 8 decimal points or more. There's concept of gas fees, and I think the goal is to try and abstract away that complexity as much as possible. But maybe Ritu, I mean, obviously Tariq mentioned around crypto and the ability, crypto moves. Stablecoins shouldn't move. Do you draw a distinction between stablecoins and kind of crypto in terms of kind of usability, in terms of how you think about funding mechanisms?
Absolutely. We were chatting before the panel started, and I was thinking that, one of the things stablecoin sort of brings to the table is it kind of opens up more hearts and minds from a risk perspective within the organization, how we approach it as a means for payments. Because crypto is although, I mean, it is tough to say this, but still, crypto just puts a lot of risk alerts all over the system the moment you say the word crypto. Stablecoin sort of doesn't do that in quite that way. Yeah. And I think that is from an organizational perspective, the risk perspective, throughout, whether you're launching a new product, who's looking at it, who's reviewing it, from a compliance and a regulatory perspective as well. And then I think also from the customer side of things, because Tariq mentioned that, we are looking at high net worth customers, people who want to be, we are in the business of trust. It's not trading, it's about trust. So to get customers to trust us, we need to be able to offer mechanisms which are as sort of foolproof as possible. And I think stablecoins go a long way in that side of sort of as a payment solution. And when I talked about sort of familiarity, it's still, because it is, it's sort of backed by a fiat, people understand it. It's also about the customer experience part of it as well. For people to get their sort of heads wrapped around it from a customer perspective, I think they understand this much better because they are used to dealing in dollars and euros and pounds. And they're like, oh, I understand it. I get it a little bit. I'm trading in derivatives. I understand that part. So now I'm dealing with stablecoins instead of my card or instead of my bank account. I get that part. It is backed by USD or Euro. So I think that makes a difference.
Yeah, I think you highlight a great point about the distinction between stablecoins and crypto. I think, over the last 12 months, we've seen that distinction increasingly grow. Even, for example, under MiCA, there's a difference in approach, right? Stablecoins as a payment method would fall under an EMI, but as opposed to effectively the crypto registrations that exist. In the US, for example, there's a stablecoin bill that potentially will pass, again, making it very distinct from crypto. Obviously, the two are very intertwined in the sense of that stablecoins rely on cryptographic technology and the ability to pay for underlying network fees in crypto. But I think there's increasingly a distinction both in boardrooms in terms of their risk profiles and then also just from a regulatory perspective.
Absolutely. I think it's now you're getting the conversation more around blockchain.
Yep.
That, we are using blockchain. It's not about crypto, but it's about blockchain. And stablecoins are built on that, and they're backed by fiat. So it makes suddenly the whole risk perspective changes.
Yeah, maybe Nithya, you can share a little bit more. TP ICAP's obviously been in the space for quite a while, doing lots of different things. In terms of kind of as a funding mechanism, what are some of the considerations that you think about?
So within our work, obviously, if you think about a spot crypto exchange, and if you have a network of custodians that you need to work with, clients obviously would fund at the custodian, at the custodian level, and that currency is based on fiat rail.
Yep.
And the combination of cryptocurrencies. And obviously stablecoins would sort of help asset mobility. For example, when clients need to move out assets in USD, they're constrained currently in the fiat rails by Fedwire hours, or they might be constrained over weekend hours, which is where the markets like crypto works over the weekend, not traditional markets. So stablecoins have a number of use cases there. And if we think about what kind of stablecoin do we need, I don't think there's a unified answer. I don't think there's one coin that roots them all. rather it's a fragmented approach currently. And it's again based on, like everyone's alluded to, the regulatory landscape, the compliance, the trust that the stablecoin brings to the table as to saying how stable is the stablecoin.
Yeah, I think you highlight a great point that stablecoins obviously is an amalgamation of different underlying assets, right? You have PYUSD, you have USDC, you have USDT. Each of these are different in the way that they operate. Secondly, how they're perceived, and then also what Ritu highlighted around the kind of the key geographies. USDC is more predominant, for example, in certain parts of the world. USDT is much more prominent, for example, in LATAM and Asia. So I think you highlight a great point about this. We've kind of bundled stablecoins versus crypto. There are many different types of stablecoins. Maybe Laurence, what would you define as success around kind of a funding with stablecoins product, and maybe just dovetailing a little bit more, do you draw a distinction between internally around, for example, a USDC versus a USDT versus a PYUSD, or do you just say, look, whatever can be supported is supported as long as we receive fiat on the other side, we're good?
Yeah, so I mean, the position we're in today is like I mentioned earlier, zero hash powering our US brokerage spot offering. So as of last week, now customers can deposit Bitcoin and Ethereum into our sort of ecosystem as such. So the ability for our clients, we're completely product agnostic, right? So whether they want to bring in crypto to the brokerage, sell it to trade options, or they want to bring it into the brokerage to then move to the self-custody wallet and trade other cryptocurrencies that might not be available on the brokerage side of things, we're in a position where we just need to provide as much sort of access as possible to these emerging technologies. In terms of the stable coins themselves, I mean, hitting on the fact that they're going to increase the speed that our customers in those emerging markets can deposit into the brokerage is obviously massive, and the cost reduction as well, right? So I think just giving that optionality to our customers is of utmost importance. But if you move across to sort of the regulatory side of things we were speaking about before, when you've got the likes of USDC now being approved under MiCA and becoming a regulated stablecoin, that just helps bring the pieces together to get comfort, I guess, at a board level, to be able to then say, look, this is a regulated stablecoin. This is going to be facilitated via X parties that are also regulated in that jurisdiction, and that just builds up that comfort. So I hope that the quicker that regulations around stablecoins can come into place in multiple jurisdictions, the sort of better the position will be in.
And if those regulations are compatible, that would
Yes.
Yeah, I mean, in this space, I would definitely add that we like regulation, right? It's not as if we don't like it, we want it. It's done in the right way, in a homogeneous way, because there is an opportunity to align this globally. Because of the seamless nature of stablecoin or of the crypto world itself, I think the regulation really needs to keep that in mind. Otherwise, we'll run into the barriers that will be difficult.
I think you flagged a great point that, stablecoins are this effectively what people term sometimes a network of networks, right? We can connect people across the world. The accessibility of access to stablecoins has increased rapidly, right? If you think about just in this room, folks who have a Revolut account, you can now access stablecoins. If you have a PayPal account, you can now access stablecoins. If you have a new bank account, with close to 100 million customers, you can access stablecoins. So this infrastructure, this accessibility, this technology has increased very quickly, but there are these, geographical constraints that can certainly exist. Maybe, Tariq, maybe just turn in a little bit around, you spoke about the opportunity, the solution. Given that you've launched this funding mechanism, what would you say are the key challenges or considerations for folks in the room as they think about both a stablecoin and crypto funding mechanism?
Yeah, I think one of the critical points for me at Trade Nation was bringing the rest of the business with me as we went on this journey, because it was a huge sort of learning journey for me, but for the whole business. And compliance obviously need to be handheld and need to be on that journey as well. And we had to put the right sort of procedures in place to to mitigate risks. And I suppose the way that risks are mitigated, whether it's AML concerns or fraud or those kind of other cases, when it comes to stablecoins and cryptos, yes, they can be mitigated. It's just in a different way, and that just needs to be thought through. And I think that conversation with the rest of the business is really important, because not everyone will be as close to what's going on, with payments or cryptos or blockchain more generally. So it's part of an education piece as well, and just bringing people with you. I think that's one of the key sort of aspects to it.
One of the things that I used to wonder about is, with the speed of development and the rate at which things are evolving in the blockchain space and crypto space, it's not just the technology piece, but it's the entire ecosystem, the acceptance, the viability of tangible use cases, the regulation, and it all has to move concurrently for things to happen. And no wonder it's a little bit slower than just the technology development piece of it. And that's because I think it's more foundational rather than disruptive. And Bitcoin as a concept could have been a revolutionizing concept like blockchain in itself. But I see it as a more foundational mechanism where we have to try and see how everything changes together rather than in like a piecemeal way.
Yeah, you make a great point. Just solving one problem doesn't necessarily unlock them all. And maybe Ritu, can we share some thoughts as well in terms of the process? You drew the distinction between stablecoins and crypto, and maybe educating on that point, maybe saying, hey, we're going to focus just on stablecoins as a funding mechanism, as opposed to the broader kind of asset class. What else do you think needs to be thought through?
So the internal sort of alignment in education I think is fundamental, because people are familiar, but as I say, little knowledge is a dangerous thing. So everybody has an opinion about the risk or even the opportunities that crypto or stable coins bring to the table. But whether that opinion is grounded in fact, whether it is grounded in the latest developments, because things are changing as fast, right? That's what Nithya was saying earlier. And in that sense, having the right partner to work with who can educate you and also be invested in educating the company per se, the decision makers. And I think in this case, the decision making doesn't sit with one person. It sits with multiple departments. It sits with compliance, it sits with regulation, with risk, and of course at the highest level in terms of the business decision, whether we want to go in this direction. There is a brand and a reputation concern that sort of could outweigh any of these, right? You could get a green light from all of these, but we're like, oh, if we have crypto on our website, does it make a difference? Like, do we get viewed differently from a regulatory side of things, or the scrutiny that comes with it? So I think that level of alignment with the right business partner, with the right level of education, forms a very crucial part of the process. Education about the risks and the opportunities, and are the risks sort of any more than what we are doing today, right? That's also very important to understand and highlight internally. Because we all take risks in business, and that's how you grow business. It's a question of what is the appetite and where you're drawing the line. So being able to understand that and articulate that. And of course, to have champions who are experts, because I'm certainly not an SME on stablecoins and crypto, but it would hugely benefit me from a business perspective. So we do have SMEs within the organization. So aligning with them to sort of champion the case to the right people in the right place. I think these form sort of a very crucial part of the process. Then, of course, going about it in a POC manner, which is when you try and do anything new, you want to do a POC. You want to go live with something, give that sort of evidence to everyone, saying that this is a stable way of doing business. We can offer it to our customers, like Tariq was talking about earlier, there will be issues so that we can sort them out as we go along in the process rather than have a big blow up because the cost is too much. And then, of course, expanding the use cases and the markets as we go along. I find that useful.
And I completely agree with the educational side of things. I mean, it can be really intimidating when you first open some of the blockchain analytics tools, for example. Although they're incredible products that are provided by the likes of Elliptic and so on, at first glance, it really can be quite intimidating for compliance functions that haven't actually dealt in digital assets before. So once that sort of level of understanding they've got through that level of understanding, then suddenly you're in a position where, okay, actually this isn't as intimidating as I thought, and there are controls we can put in place around this sort of funding mechanism. But I guess also you've got the operational element as well, right? Where if you're an international business, you've got a trade desk that's serving customers all over the globe. And if you're not abstracting away a lot of the complexities in the UX process, like you mentioned earlier, gas fees, suddenly it can be really quite intimidating for the client before they make possibly a large deposit. So the trade desk needs to be comfortable in explaining what on earth is going on, right? So you need to make sure that sort of knowledge base is expanded across functions.
Yeah, and I think what we found at Trade Nation was it's not just about the controls and the considerations in the education for blockchain itself. It's the kind of customer that you're now open to. It's a different kind of customer. Like I mentioned before, it's like higher values, and that's got all kinds of implications, for the trading desk and for other departments of okay, we've got this different kind of customer, different sort of trading patterns and different strategies because of the scale involved. Yeah. So I think there was that as well. It's not all about the blockchain technologies operationally. It's about the kind of access you're giving to different markets and different kinds of customers.
Yeah, no, absolutely. I think that's one lesson I've definitely had, which is for this product, is there is a broad education, right? So you've got to often get the finance team involved. If they're a broker-dealer or a regulated entity in the US, there is a very specific accounting rule, sub 121, where you have to kind of detail that this is not crypto that's on balance sheet for XYZ reason. If you talk about the compliance team, they're nervous around on-chain transaction monitoring, travel rule, sanction screening. We handle all of that, but educating the team on those points, and then also just the business leads around the UX, the usability, right, the abstraction away of the gas complexities, I think is a really, really important point. So it is this, I think that the general trend is that you have to bring multiple stakeholders along at the same time. Maybe just last question, and just briefly each, we've obviously focused a lot in terms of stable coins as a funding mechanism, but obviously we've only just scratched the surface of what stable coins are. For example, the ability to have programmable money. I'm curious, maybe just taking a step out or maybe focus on here, what excites you about stable coins, maybe more generally at a 30,000 foot view?
The fact that using blockchain or technology for a fundamental concept such as money can unlock so many opportunities if it's intelligent money. For example, takes away, maybe can take away maybe can take away some of the work that's done in terms of dividends, interest rate payments, more smarter, reliable, and more efficient, really. Also, I think from a monetary policy perspective, it raises a lot of interesting questions as to how central banks deal with programmable money and what efficiencies can that bring to our entire ecosystem, because how does inflation work in those circumstances, etc., become a very interesting conversation.
Absolutely. Laurence?
So the accessibility for me is a huge factor, where all of these individuals now are able to just access markets in a very different way to they have done historically. I mean, just talking from my own personal perspective and what I do, I mean, most of the time now I'll look to take positions in crypto almost on a monthly basis, but straight away I'll be funding my account or getting into a stable coin that's yield bearing. So it sits there, it's yield bearing, and then I'll go and make a trade or investment straight out of stablecoin. But if all of that can be interconnected and me be able to fund my trading account because I want to participate in a traditional asset rather than a crypto asset, then that functionality will be there. So it's going to be interesting to see how various currencies beyond USD turn into stable coins. Obviously, the US dollar is the largest global currency by a huge stretch, but when will we have a British stable coin? When will we have a European stable coin that has substantial value and liquidity?
Yeah, I think for me what's exciting about the future is when we think about the concept of programmable or intelligent money, I think it opens up a lot of possibilities for automation. So if I'm on a margin call on a position, then a top-up transaction can be automatically initiated, or when my account balance hits a certain threshold, then take this action. So there could be all kinds of possibilities. We'll have to see. I mean, usually with this kind of innovation, it's the things you don't see, or the use cases are hard to predict. But it will be really interesting to sort of watch this space and see what comes next.
Excellent. And Ritu, so to close us out, no pressure.
Sure. I mean, programmable money, to me, it's smart money, right? Because the underlying is the smart contracts, the underlying basis of it. And underlying sort of, and then any use case that builds on top of it is built on the intelligence and the automation those smart contracts bring to the table. In the world of payments, it absolutely unlocks intelligent payments, which is your money will be where you need it, when you need it, right? And you won't have to be all over it, whether you are a customer, like an end consumer, whether you are a treasury person managing the different ledgers and bank accounts, etc., whether you're a trader and you have open positions that you need to fund, whether you're a corporate managing salaries for a distributed workforce across the world, whether you're an individual contributor, where you are doing sort of fractional work. I think the concept of fractional work is one of the sort of latest things I've been sort of hearing about, which is you're contributing to the work on a blockchain and you get paid as you go along. And you may not be contributing all of it, you're contributing to a part of it and you get paid a part of it. And I think the way stablecoins are different from traditional currency fiat is that it's integrated within the transaction. Versus traditional money or fiat sits outside of the transaction, business transaction or individual transactions, which is the real exchange of values happening outside, and then you're paying for that exchange of value with the money on this side of the banking system. And I think programmable money integrates money in the transaction. And I think that itself has huge potential sort of going forward.